What's going on, guys? Welcome back to another episode of the Landlord Society podcast. I'm Charlie, you're here with HD, and today we're going to be talking about the next property boom in Australia, because there's another one on its way, kind of already here. As you can see, the last 12 months in Australia, some of the growth in some of these suburbs have been unbelievable. And we're going to talk about how to take advantage of this moving forward. Obviously, there's going to be a few changes in the economy over the next 12 months to 2-3 years. So we're going to go through from A to Z, how to retire early, given this amazing growth, how you can take advantage and not be someone who just gets left behind. Handol, what are your thoughts, man?
Yeah, man. It's property's all the rage in Australia. It always is. It's because of its steady growth over the years. Why would you look anywhere else? The banks approve it as leverageable assets, and the strategies are so clear set. If you know what you're doing, it's basically a money glitch. If you're an Aussie and you have a decent income, allows you to buy a house, and you can't make money out of property. Seriously, what are you doing? What are you missing out on? Because the opportunities we're seeing out there is absolutely phenomenal. A
lot of people at the moment are getting caught up with cryptocurrency.
Yeah,
because they're now, at the time of this, it's at all-time highs, and people are chasing the shiny object.
Yeah.
So, but there's more speculation with something like cryptocurrency, obviously, as opposed to the long-term proven asset.
Look, if you know your shit in cryptocurrency and you want to start investing into that, go, by all means, go for it. As a general asset class, if you're good at what you're good at, you're good at it. If you're good at churning butter and you're good at selling butter and you make millions of dollars a year, hey, more power to you. I just don't even know how to make butter. That's it. So if that's your trade, then go for it. I guess people then believe in the trade that is real estate, and there are opportunities here, and it is not as hard as crypto, and that's why I'm here. You know what I mean? That's why you're here. But the thing is, I personally also invest in crypto as well, but obviously, because there is more risk associated with that, I'm just allocating a smaller portion into that asset class. You know what I mean? It's just portfolio management theory right there. Just sound investment methods right there. Of course, if you want to go balls deep into crypto, first of all, welcome to the wrong podcast. But if you wanna do that, I'm not, who am I to say do this and that or whatever. But here, talking about properties, what is the opportunity here? I think all the rage right now is that property prices have gone up. It's becoming a lot more unaffordable. See one of the latest articles we're looking at from realestate.com.au. We're seeing titles and headlines like 4 ways first home buyers are beating rising house costs to get into the market. That's all the rage, is trying to get into the market. It's rising, and you want to ride that rising wave. If you're in the market, right, then that's good, right? You've bought something, you're in the market. The market's going to do its thing, of course, right? And that's going to take however long. But obviously, the landlords that we're obviously coming with a system that's going to obviously fast track that growth. That's what we want to do. So the rage is...
Yeah, we're always finding new opportunities in the current market.
Oh, of course, that's right. And so the rage is obviously finding those opportunities. What's a suburb selection that we're going to do? How are we going to save up a deposit? How are we going to save up a deposit for the next property?
So we've got more of an agenda here, talking about some of the strategies that we've seen a lot of people use, buying properties off the market. It seems to be a very popular topic right now, I've noticed.
And then interstate.
And also if it's a good idea.
Yeah, if it's a good idea. Interstate as well, right? Interstate, that's all the...
Interstate property is another one, yes. Yep. There's... people are very interested in buying where it's more affordable. Obviously, prices have moved up, making affordability a problem for a lot of home buyers and investors. They're going to where property is more.
Can we actually talk about the interstate properties first? So the word interstate, the reason why that comes in tandem with, I guess, property investing in Australia at the moment is because a lot of the population is in Sydney, Melbourne, right? In these areas where property prices have gone up quite crazy. So people going I actually don't have to live where I invest, okay? And I just want exposure to the market. And to be able to invest into these towns, well, it's too expensive, right? So, imagine somebody makes $80,000 a year, they need to have, 20% down payment plus your bloody stamp duties on a $800,000 home. Bloody hell, they got to have a good amount of $200K saved up. And how do you save up $200K as somebody that makes $80,000? Yeah, unless your parents do you a solid and you've got you got some guarantee or whatever coming through. But that's not a privilege known to many. But we want to break that mold. Here at the Landlord Society is that, look, you don't have to be rich to make money, right?
It helps, but you don't need it starting out. Yes.
Interstate is the question that pops up to people's head. Go, okay, well, there's other states that are growing much faster, that are a lot more affordable, and that's what I'm trying to go for. Well, guess what? What do you know? What do you know about the interstate waters that you go, okay, I feel comfortable enough to throw some money at something that I've never seen before? Like, that freaks people out.
Yeah. Oh, for sure. Yeah, investing in what you know will give you an edge. It's always a good idea. But I encourage people to learn more about interstate property if that's something they want to do.
Exactly right.
Now, that's not to say if you live in Sydney, one of the most expensive cities in the world right now, there aren't deals there. There might be, but in my opinion, probability, if you're someone who can't afford that budget, you're going to have more chance going to a capital city where you can actually afford to buy property rather than trying to snipe a random hotspot regional suburb that could spike in value. The odds aren't in your favor by doing that kind of thing unless a professional property expert helps you along that journey.
Yeah, right. I mean, or you become the property expert yourself, which is what, like, we are heaps in for. I believe everybody has the opportunity, if they look in the right areas, to then become an expert themselves.
Yeah.
I know.
If you're well informed, if you're someone who lives and breathes the property industry, sure, go for it. But if you're the average person who it's new to you, I would either, get someone to help you there or actually invest in the resources to become a property expert yourself.
Yeah.
So you know what to look for and why to look for that.
Is becoming a property expert hard, Chisels?
No.
It really isn't.
No. It's not. It's not, but you've got to want to be interested in it. I feel like anything, it's hard in the beginning because it's new to you.
Yeah.
You're not used to it, but then you make a few sacrifices, you put the effort in, you focus, you learn what you need to learn, talk to the people that you need to talk to. And then it becomes easy. Then you become a property investor.
Yeah.
Okay? You become someone who is a property investor. So it becomes your identity. You know what to do.
Look, at the end of the day, the way I see life is that, look, there's nothing that really hard in life. It depends where you look, though. It depends on the quality of the information that you get and across what span, and what of it is wastage and complexity and what of it is actually genuine information. If it's genuine information, then, we're all reasonably intellectual enough to tackle something like Aussie properties. That's the way I see it. I mean, I know property, you know property, and knowing like a cool 24 properties that 24 property investors that I know, like, none of them are particularly geniuses. They're just like normal people that just learned the stuff that they needed to know, applied it, made it successful, and it's all well and good. So interstate.
That's it. And the other day, a little story actually is that the other day I went for a walk with a lawyer. She's a young lawyer. She's a very intelligent girl, but when it comes to money and investing, she doesn't really know what she's doing, which is normal. It's completely normal. There's nothing wrong with that. But she bought a property a few years ago, just after COVID. And she didn't really know what she was doing at the time. She got lucky with the purchase, however. It was a really good suburb in Perth. And now she's decided to buy another property now because she has the affordability to do so. Renting out her property for an absolute premium. It's paying itself off. So she's building the cash flow and the equity. And that, I had a really great time having a conversation with her about that because she now understands that she's got a lot more options than what she previously thought. So if a conversation like that can spark her to take some action. Absolutely.
But here's the thing. If only she knew what she was doing, then she could have just kept doing that, which is a lot easier than being a fucking lawyer, right? And she would have just quit by now. You know what I mean? Like, I don't know. Like, if somebody gave me red pill, blue pill, and red pill says, hey, you'll have a 9-to-5 career for the rest of your life, right, and live a decent life. Okay. And then the other blue pill was you will quit that and you'll just go around buying properties. I'll be like, yeah, I'll pick buying properties any day of the week. Like, I don't care how good the 9 to 5 is. Like, how good can it get, bro? And like, because it's the ticket there is freedom, right? Do you have freedom or not? Like, at the end of the day, that's what it is. And I think it just boils down to, if you're really, really honest about your value systems, then you would channel your efforts in a different way. Controversial statement. Yeah. So yeah, exactly right. But let's actually talk about the interstate there. So I'd say the thing that really will set apart somebody who considers investing in interstate and actually investing in interstate is not the size of their balls, but I'd say it depends on what they know. All right, because as long as they know and have the confidence to then invest into an area that they know that it's going to grow and it's going to do well, then the action will then become the result of that knowledge. Does that make sense? It's not something that you have to like cultivate. You know what I mean? Like if you're like, oh no, I just gotta take a leap of faith, and like property investing is not a leap of faith. It is not a leap of faith. It is a calculated and a knowledgeable decision. And the sooner you treat property that way, the better experience and more profits you'll be able to result in property investment activity.
Right? The risk is mitigated by what you know.
Exactly right. Absolutely.
The risk is in what you don't know.
So the fact that, I mean, I was watching this video about stress, and people go, oh, I feel so stressed. Stress isn't about like, the reality around you, the circumstance around you, but is not being able to get to where you want to be because there's no choice around it. So people go, oh, I want to be able to make money with property. Well, then I'll ask, well, what do you know about property? Right? Because people go, oh, I know nothing about property, and therefore I can't make money with property. Therefore I feel stressed. I'm like, guys, then the solution there is just knowledge. And another thing is, another misnomer that I want to break is, oh, I don't have enough money to invest in property. Like, bro, 95% of people that I know are incredibly rich with property, and you know, yourself, myself included, started off with bugger all. And I asked most of these people, I go, oh, so how much money do you actually make and how much money do you actually have? They have folds more income and saving than the people that I have spoken to. Seriously, if you see the opportunity and you understand the opportunity well enough, right? Money is not the issue. You make your money in property with your head, not with your bank account. Like, I really want to stress that point, is that if anybody's out there listening to this podcast going, you know what, I don't have enough money to invest, you are thinking wrong. Like, your thinking is so wrong. You got to then go, okay, well, then I'll ask, what do you know about property?
What's an example, HD? Do you have an example of, for people listening who may feel like they don't have the money, what they might be able to do to get around that?
Well, first of all, what are you actually looking for? And are you certain that the thing that you're looking for is going to make money? Right? Let's be honest. So say somebody makes, I don't know, 100K a year, 120K a year, let's say. 120K a year. They got about $100,000 saved. Right? They're looking for properties around about that $900,000 mark, because that's what the properties are going for in the area that they happen to live in or grow up in. Okay? Great. Can you buy it? Probably not. Probably not. Depending on the situation that they're in. Okay? I don't know the situation that they're in. I'm not their finance broker. I haven't done their pre-approvals for them yet. So I don't know. But if that's a situation that they're in, and they've got to go to the bank, and the bank goes, oh, no, I can't lend you any more money than $750. And they go, oh, I want to buy something $900. And I go, okay, well, you're looking for that property, and you're looking to buy that property, and you can't afford it because the bank won't approve you for it. Okay, I get it. Say that the bank did approve you for it. Better yet, Charlie just called you up tomorrow and wrote you a $500,000 check, right? Are you certain that then that property that you buy is going to make money? Like, are you sure? Is that the best move you could be making? Really? Because then what then gave you the causation to then look for that property in the first place? Is it based on some real knowledge and some sound investing strategy, or is it based on just your wishful and emotional thinking? Challenge number one. What are you looking for? Are you looking to fulfill your dream, like your emotional thing, or is it like, are you trying to actually build wealth over here? Because this podcast is for people who are trying to build wealth, not to scratch an itch. You know what I mean? So that's a real concrete example that I can give. Anything else like numeric, this and that, like it. I know people who bought $200,000 properties that made $100K within a year, right? And let's say you could afford $1 million, wouldn't you rather do that 5 times over rather than make $100K off $1 million property? I don't know. So like the mindset is really important. Again, the mindset changes with what you know, So if you're just sitting there complaining and being stressed, well, then I'd seriously ask, well, what do you know? And what are you doing about it? What are you actually doing about it? Because the knowledge will set you free, but the lack of knowledge will make you remain in frustration. Well, another thing is also another thing that we actually, profess in the academy is that we help people understand what their money mileage is. Like money mileage basically means like how far can your money go, basically. If your life is just like filled with activities and things that you do, whether that's, that you classify as investing like into stocks or even like investing into yourself like sport or whatever, or some hobbies and whatnot, wherever you spend your money into, right? And let's say the activity there was that, you basically put money into this hole, right? You're squeezing money into it, putting more resource, time and energy into it. And it spits nothing back out, like nothing particularly significant. Then you'll be like, why am I earning my money for? Right? Like, it's not particularly incentivizing. But then if you crack something and you've got something where like you found this bucket where you throw money and resources into it, and all of a sudden it spits out more money back at you because you've cracked it, because you actually understood how it works, then wouldn't you channel your energy more into then building more resources to be able to then cultivate into that method, right? People who understand that money mileage is good. If the furthest your money can go is a trip to Bali and a wine tasting at the local vineyard, right, with a fucking cheese platter, right, and you're going to the gym and like with minimal results, I don't know, wherever the fuck you spend money on, that's not a very far distance that your money is traveling. But then if you crack something on real estate and you're just like, oh, dude, I spent $1 in there and it travels so far and it comes back as like $5 back. Boom, boom, boom. Then wouldn't you be more motivated to do better in your work and in your business, right? People with that's why rich people invest in real estate, because they're working in their business and they're throwing that into real estate because it's such a rewarding investment. And they've cracked it, they've understood it, they've met the right people for it. And that's how they understand their money mileage to be able to be motivated to then go and make more money, build more wealth, so that they can do things that they genuinely love and spend more time with their family, et cetera, go traveling, whatever. Right? So I think money mileage is a really, really crucial step to understand. So it all comes down to where your head is at, right? A little bit philosophical here, but I think it is incredibly important to address this, because this is where 99% of people stumble and fail, is they limit themselves according to their circumstance. But anyway, let's talk about more of the technical stuff. But going back to the interstate, if you want to be able to start investing interstate, you need to bolster your knowledge. That is number one. That is very, very important. You have to understand how it works. So one of the ways that we see that is obviously, and then one of the ways that we want to expand our knowledge into is how to do off-market deals in interstate, because that's like a double whammy. It makes it even better, right?
Whoa, hold up, Landlord Society.
Are you sick and tired of the rat race and you want to start building wealth with property and generate passive income?
Then come and drop us a follow on Instagram and DM us the word Landlord.
The word what, Charlie?
The word Landlord, like the Landlord Society.
Okay, wait, Charles, what's our Instagram handle again?
At landlord.society.
You heard him, everybody. DM us the word Landlord to our Instagram to learn more about property investing. Now back to the podcast. But Charlie, you want to talk about rent vesting? Did you? Do you want to just mention something about?
Yeah, I did, because I think a lot of people have, they're struggling to fathom purchasing a home. So they purchase a home, they funnel all the money, their surplus cash flow into that place where they're living.
Yeah.
With non-taxable dollars, when they could be renting out another asset, generating cash flow. Even if it's not positive cash flow, all the expenses on the property are tax deductible, so they can take advantage of that.
Yeah.
Whilst living where, they're taking advantage of cheaper comparable expenses where they live by renting.
Yeah.
Okay, because a lot of situations, people are paying more per week in interest on their mortgage than they are renting at the moment.
Yeah.
Now, rents have gone up in value, but so have interest rates. So might as well make it tax deductible and start your property journey with that.
Yeah.
And also it's more affordable depending on where you buy it.
Yeah.
Yeah.
See,
So I think that's a really good place for people to start, given you know your budget, you know exactly how much you can afford to spend each month.
I really like that, because I think home ownership, not investment property ownership, home ownership is super overrated, man. Super overrated.
Yeah, no, absolutely.
We are one of the most dynamic and transient generations humanity has ever freaking seen, right? We are all over the shop. And to think that we're going to commit to a house and live in that same house for the next 20 years is absolutely ludicrous, right? You're 22, 23 years old, right? You're single, right? You get yourself a house. You think you're going to live in there forever, bro? You'll find the missus and you need to get a slightly bigger place, right? And then after that, when you live with your missus, you don't want to live with anybody else, right? So why would you need a 3-bedroom house, right? So you're wasting the extra rooms with no particular value in it at all. And then you'll have kids. You'll have one kid, and then you have 2 kids, and then 2 kids are different to 1 kid. Some of you have to have 3 kids, or if you have 2 kids, and 2 kids grow up to be toddlers, and then teenagers, like children and teenagers, right? Between now and 20 years later, like I wouldn't be surprised if you live in like 7 different houses. Like, why do you need to own it?
That's the thing. People will buy their first property with the intention to live in there for 30 years.
Yeah.
Only to move 8 years later and pay all of the acquisition costs and all the sales costs that come along with it.
Exactly. And then that average is dropping as well. The people used to move once every 8 years. Now people are moving like once every 5 or 4 years, man. Right? People move around all the time, mate. Like everyone's life is changing drastically all the time. Like just everyone listening to the podcast right now, just think back to your last 12 years. How many houses did you live in? If you live in the one property, that's fine. Maybe you were just a child. I don't know. But the fact is, if you had the freedom, you would have just moved around a bit. You know, people are now getting jobs interstate. People getting relocated, this and that. Like, it's really freaking overrated. And don't think that you're going to buy something and you're going to live in there for the rest of your life. And if you do, whatever, like, good luck to you. You've been single for the next 10, 15 years. Congratulations, whatever. I don't care, right? But if you have a genuine, like a pretty general sort of course of life that you take, right? It's not going to be surprising that you're going to very quickly feel the need to change your housing situation from like a 1-bedroom studio in the CBD to getting a 2-bedroom suburban flat with your missus, to then getting a 3-bedroom house for your toddler and children, and then getting a 4-bedroom house for your teenage kids with a pool, right? And then fucking moving to, I don't know, if you want to go to a 5-bedroom house again with a pool, or get rid of the pool because you're over it or whatever. And then from the 5-bedroom house, you're living there by yourself and your kids move out, and then you move down to a 3-bedroom house so that you can entertain and have friends over and whatever. And then you become really old, and then you're down to a 2-bedroom place. And then like it's just you and your wife or whatever, or you get a divorce, or like so you don't really need that anyway. You're moving out. Like renting is a lot simpler. But then just by doing that, you got a lot of expenses. You'd rather have some properties that are gaining money at the same time, and then that will service people who would need that flexibility as well and receive their premiums, right, to be able to capitalize on that, which will then give you the flexibility. And then a lot of young people, this is what I say, it's like, I'm like, oh, you know, I'm going to live in this for the next 30 years. I'm like, bro, but don't you also want to travel like a year at a time? Like, bro, what are you doing, man? Like, just get real with yourself, okay? This thing about I'm going to buy one house and live in it for the next 30 years is just not feasible. Happy for you to own the property for the next 30 years. So you'll make lots and lots of money, right? If you frame it right. Yeah. But that's why I'm saying home ownership, okay, is overrated. Investment property ownership, underrated. Go and buy an investment, guys. Go and buy an investment. So, yeah. Let's actually talk about then. Let's move on to the topic of how to get off-market properties.
Yeah, off-market properties, it's a great one, Handel. And I think that something that I've noticed become quite popular, especially with the wave of buyer's agents coming in. Now, an off-market property does not make it automatically a profitable and good investment. Just because something is off-market does not automatically make it a gem. It just means that it hasn't gone to market yet. Now, the right asset off market might provide you with an opportunity because you're not getting the competitive price of what it would otherwise get if it had gone to market, and everyone else is making offers, right? So that's one of the main benefits. You might be able to purchase a property at or below market value. Fantastic. But it comes down to the relationships you actually build with agents. So, for example, if we call up an agent and just ask them how their day was once a week and how's the property market, have you got any opportunities? Have you got anything that I'm looking for, like based on the criteria that you'd already given them? They might bring you a few deals here and there. But if you're someone that doesn't have, like you're not ready to buy a property, why? And so it's hard for them. The agent has to jump through more hoops in order to give you that property rather than just market it and sell it to the public. Why would they choose to do that? Okay, so it's more about motivating them to give you the deal rather than taking it to market. So things like having pre-approval, talk to your finance broker, have pre-approval ready. So you're sharp, you're ready to go, you're ready to do the deal then and there if they bring it your way. Okay, that way they don't have to worry about the marketing, they don't have to worry about the auction, all the hoops they have to jump through. You have to make their life easier and they'll make your life easier.
One thing I've learned from investing into property is that everybody, literally everybody in this game is sizing you up. If you pick up the phone with a real estate agent, right, and you sound like an absolute brat and like you don't know what you're talking about, then they're going to size you up and say, well, because at the end of the day, agents cannot see your books. They don't know how much money you make. They won't be able to know how much money you make, or they're not your accountant, so they will not know how much money you make or you have saved. Even if you say you got the pre-approval, anybody can say that, right? Are you sending them a letter that says that you've been pre-approved? No, but the way you know and understand property is what's going to then allow them to know, this guy knows his shit. He sounds like he's owned 2 or 3 properties already. 4 properties already, then they're going to treat you differently because they know that they're going to get that easy deal out of you. They know what you bring to the table, right? The mistake that people make is that they talk to agents without knowing anything. Then they're going to see you as a potential target, and that's pretty much it. And the way they're going to target you is by putting a property on the market and playing games with you until you cough up some crazy price so that they look like a hero to the vendors that they work for. But the way you build a relationship with real estate agents is, it's not about being nice to them, but more importantly, sizing yourself up to them to say, you know what, I know properties, right? And that's got nothing to do with actually how many properties you've got, but it's actually got more to do with what you know about buying properties, growing your portfolio. Because if they hear you out and they know that you know your shit, bro, they are going to do everything to continue to work with you and bring more deals to you. That has been far more effective.
If you can demonstrate your expertise and your knowledge base to an agent, they're going to jump through hoops for you.
Exactly. And if you say the wrong things, or if you think you know, and you're saying all the wrong things, then they're going to figure that out pretty quickly as well, size you up, and you're gonna turn out pretty small, and they're not gonna give you much time of the day. Real estate guys, they know what works, what doesn't work, especially in the areas that they're in, because they've seen so many transactions happen. They've dealt with the top level clients, right, who've got a lot of properties. So they know what works and what doesn't work. So if you're speaking in the tune that does work, then they're going to think that you know a lot of stuff. And then based on that, they're going to deliver you a lot of opportunities. But outside of that, if you don't know what you're talking about and all you sound is just cocky, then they'll be like, okay, well, let's just put them on a database and see you later.
So guys, those are some of the biggest considerations that you must have in place before you get started with investing in property, okay? We don't want you to get stuck in paralysis, but we don't want you to walk in blindly, okay? This is going to give you the best results over the next 3-5 years. So that's pretty much how I would sum up getting started and taking advantage of this property boom. Not every suburb is going to experience growth at the same rate though, okay? There's some pockets are primed, okay? Some pockets have short-term demand and that long-term owner-occupied demand as well. That's what we focus on because we want to exceed the average growth rate in capital cities in the immediate future. So the next 12 months to 3 years, we want to see, 10% annual average growth rate. That's what we like to aim for, minimum, really. Okay, $500,000 property, that's 150 grand growth. More, that's compounded, it's about 200 grand of equity growth over a few years. Okay, that is, and then you can buy another one. That's how we snowball this whole thing. Okay, and then you get options to, do granny flats and dual occupancy and buy to let, which is another one that we like at the moment. Like short-term student accommodation. So you get multiple income streams from one property. These are options that starting off with the right foot is going to get you.
All right, guys. So great to have you guys on the podcast. If you haven't done so, make sure you subscribe and get the noties all turned on. Of course, we're dropping absolute golden nuggets. Thanks for tuning in with us today. Go visit us on landlord.society on Instagram. Drop us a follow, ask us questions, and we would love to see you guys in the next episode. Until next time, we'll see you later. Peace out.
Cheers.